We are in a very interesting environment, and reminds me of the old Chinese proverb about may we live in interesting times, but it's not really a proverb. It's a curse. And I'm superstitious. And if you're an economic and financial market forecaster and you're not superstitious, you probably should be, because we need all the help we can get. So speaking of China, in the Chinese zodiac, this is the year of the wooden snake. And the wooden snake happens every 60 years. So I think that's a little apropos, because we probably have with Donald Trump 2.0, a 1 in 60 event. Other words, as you mentioned, uncertainty, unpredictability, and how you invest in this sort of world where there is so much uncertainty and the confidence bands around any forecast are much wider than they've been, I would say, perhaps in our professional lifetime. In answer to the question about the data, I'd say that if you look at the data at the headline level, you got a U.S. economy that's growing pretty nicely. But I'm not seeing ratification in other pieces of information about the beloved U.S. economy. For example, the survey data that comes out from the Fed itself. We get the Philly Fed indices, manufacturing services. We got the New York Empire manufacturing. We just got the Kansas City Fed manufacturing and service. So we get these ongoing, timely, monthly survey data on manufacturing and services. And we have the most up-to-date numbers for January. We actually create a Z-score or a Z-score out of these surveys as corroboration for what the government data are saying, because that's what you cited before. All those numbers come from the Bureau of Labor Statistics, the Commerce Department, so on and so forth. No, the survey data are not flashing a 3% growth economy, more like 1. Now, not -1, so you can come back and say, well, it's not a recession. However, I'm pretty sure when you and I started in the business, God knows how many years ago that was, we got down to 1% on GDP growth. People would be asking, so when's the recession starting? It's what people like me and Stephen Roach in the old days would say, stall speed. So no, I'm not buying into all the government data. The Fed's beige book itself, the beige book comes out every 6 weeks. The Fed started doing the beige book in 1970. It's interesting because it's not quantitative, it's qualitative. And it's a survey that comes out every 6 weeks. The Federal Reserve sends their staff into the field and interview business contacts across the country and across all industries. We just got the beige book 2 weeks ago. How to describe the U.S. economy. Describe the U.S. economy not the way you described it or how Jay Powell described it. We actually apply data science to this, and it's not a 3% economy. The words slight, soft, slow, modest. There was no words hot, strong, robust, buoyant. You didn't find that at all. Now the word uncertainty showed up 6 times, which is rare. I don't remember in my 40 years in the business seeing such a divergence between what the government's data are spitting out and what you're seeing in the survey data, the private sector survey data, what we're seeing in the beige book, to which I would say to Jay Powell, who correctly talks about the strong U.S. economy because he's buying into the BLS data, to which I say, we'll take the L out of BLS and maybe that's more appropriate. If you're not going to pay attention to your own beige book, why bother spending the time, money, and resources on it? But it's telling you a slightly different picture. I would say the economy is softer than what appears when you actually dig beneath the surface, but certainly market participants are believing in the government data. The stock market, the bond market, the credit market, they believe in the veracity of the data. I'm not going to say that there's a conspiracy theory going on. What I will say is that, and this is especially true in the post-COVID world, and you mentioned the non-farm payroll numbers, they have been revised down 75% of the time in the past year. And that's because the response rates, especially from small business, are much lower than they've been in the past. The response rates to the data that the government is getting, that they're producing back to us, the response rate is very low. Ergo, the error term in the data is very high. So I'm wondering, and this is what happened back in 2008, if you go back, the NBER, the National Bureau of Economic Research, they are the arbiter of dating when we have recessions and expansions. And when they told us that we were in recession in December 2008, well, what a big surprise that was. But most people thought the recession started in September of 2008 when Mother Merrill and AIG and of course Lehman all collapsed. But people were surprised when they dated the recession starting December of 2007. Why is that the case? Because the NBER, look how long they waited to declare the recession, December of 2008. At that point it became pretty obvious we're in a recession. But they dated to December 2007. Why? Because they wait for all the revised data to come. It's not because they're slow and stupid. These are PhD economists. They wait for for all the revised data. So guess what? Next time you and I are having this conversation, we might be talking about a different set of economic data. So color me skeptical over the quality and veracity of the government data that market participants are trading around. We have a sample size of 4 years, Trump 1.0, where he did all that. Restrained immigration, deregulation, huge corporate tax cuts, and tariffs. Now we could argue about the scale of the tariffs looks to be quite large this time around, but we have a sample size. And people said the exact same thing after he got elected in November 2016. I remember Larry Lindsay, former Fed governor, he was on CNBC right after the election talking about reflation, inflation, and talked about interest rates going to 5-6%. That never happened. Even before the deflationary detonation at the onset of COVID, all the different measures of inflation, producer inflation, import inflation, consumer inflation, and all the core measures were all at or below where the trend was when Donald Trump took office. How come people don't recognize that? And it's not as if he didn't have restrictive immigration policy and we had a 3.5% unemployment rate. And there was no massive wage acceleration. Do you remember Trump's first term as being inflationary? Because I don't. So we're just back to the old claptrap of it's going to be all about inflation from Trump's policies. We'll see what happens with immigration. Will it tighten up the labor market? It's an assumption. What if I told you right now that there are more than 5 million native-born Americans out of work and looking for a job? So no, I'm not getting sucked into the vortex that Trump's immigration policy is going to create some sort of wage spiral. Deregulation, well, we know that over time that is going to lead to a lower corporate cost curve. That's disinflationary. Corporate tax cuts. It works both ways. It stimulates aggregate demand, so you'd say, well, that's reflationary. True. But what else does it do? And that's why the corporate tax cuts in 2018 weren't inflationary. Because as an employer, when your taxes go down, your margins get fattened. Therefore, you don't have to raise prices to boost your margins. The government just gave you that opportunity to widen your margins without having to raise prices to your consumers. What exactly is inflationary about that? Now, tariffs are trickier, but there's all sorts of assumptions. But remember that there's 3 players in this game of the tariff. There's the foreign exporter, there's the domestic importer, and then there's the final consumer. Who is going to bear the burden of the tariff? And everybody, when you're talking about Paul Tudor Jones and other people, well, their assumption is it's all going to be borne by the consumer, but it's uncertain. We do know that in the last go around, the consumer didn't bite. There's no perceptible impact on inflation from Trump 1.0 and the tariffs he put in. On top of that, let's assume for a second that the whole burden goes to the consumer. Are the tariffs inflationary? Then you have to talk about how do you define inflation? Inflation is a persistent rate of change. It is a process. We had pernicious inflation in the 1970s, not because of the oil embargo in 1973, but because OPEC raised the oil price each and every year. It was a wash, rinse, repeat. 7 years of repeated increases in the oil price. And over that period, they raised the oil price for an oil-dependent, foreign oil-dependent country back then, tenfold. And we talk about the 1970s. It wasn't a one-off in 1973. If all OPEC did was double the price in year one and left it there, we would not be talking about the inflation of the 1970s.
It was a repeated jolt. We experienced 18 months of rising prices in 2021 to 2022. Why? The economy resumed activity, and we had all this financial stimulus, but we continued facing these ongoing constraints on supply due to supply chain disruptions, particularly in China. It was a persistent pattern. So if you're going to tell me that Donald Trump will increase import taxes every single year indefinitely, well, then we will face inflation. However, most of the time, tariffs are raised once, resulting in a one-time price adjustment. After that, you move forward. That, however, is not inflation. Now, some will counter by saying, well, if that happens, the price surge from the tariff gets passed on to the consumer. The consumer will then negotiate with the employer for higher wages, triggering a wage price and price-wage spiral. That is possible if the job market is extremely tight. You mentioned that the jobless rate dropped from 4.2% to 4.1%. You can speculate around that figure for a day, but to me, that's just background noise. What I find more significant is that the unemployment rate reached a low of 3.5% for this cycle, and the overall trend is rising, though not in a linear fashion. There is more flexibility, and you can observe it in the JOL statistics. You can see exactly what's unfolding. Even though businesses are keeping layoffs minimal, no one wants to lose their workforce. The hiring pace has significantly declined. The hiring rate is at its lowest point in a decade, which signals something about the structure of the labor market. At the edges, it is weakening. So I don't believe we will see many people aggressively negotiating for salary hikes moving forward due to the tariff. That is my expectation. In my line of economic projections, your expectations determine your conclusions. So I would state 2 points about tariffs. First, it is uncertain how much of the impact will be transferred to the consumer. But even if I'm mistaken about that, tariffs must be ongoing. Trump would need to consistently increase them for them to drive inflation. Otherwise, it's merely a one-time price adjustment. And look at what we are witnessing at the moment. What happened to prices during COVID? They surged by 20% to 30%. Prices are not falling, but the rate of inflation is slowing. Prices rarely decline overall because a substantial portion of pricing is in the service sector. You may notice a drop in vehicle prices, furniture costs may decrease, but service expenses generally remain rigid, and that constitutes the majority of the pricing structure. We admire Paul Volcker and refer to him as the inflation dragon slayer. He curbed inflation, but did he reduce prices? No, prices never declined under Volcker. He is celebrated. There's even a monument of him, because he brought inflation down from 14% to 4%. It's the pace of change that matters, that defines inflation, not the absolute level. And inflation topples democracies. Inflation dismantles empires. It is a societal affliction. Inflation acts as a levy on the most disadvantaged segments of society, the impoverished and the elderly, and it will destroy your chances of re-election, as we witnessed with Jimmy Carter and as we recently saw with Joe Biden. So I would argue that if Donald Trump creates the circumstances for an inflationary cycle, it will significantly damage his legacy. I always have to function with a level of logic, though with Donald Trump, that may be an oversight. The Republicans in the House, in particular, include numerous fiscal conservatives who recognize how harmful inflation is, not only for the economy, but also for their own electoral prospects. So I'm not subscribing to the inflation narrative. Period.